What is going on, YouTube? I hope you all are having a wonderful Friday. Thank God it is Friday, right? It's been a long, choppy, slow grind up week. I had my feelings hurt earlier in the week with the losses I had, and then was able to come into the market for the last 2 days and kind of make back a little bit on the day or on the week. Overall, still ended up down on the week, but still happy with how I performed today as I was able to capture a little bit of this grind up. Overall, emotional market, of a whole lot of gaps have been trading over the past few days. Gap up here, we gapped up yesterday only to fill the gap, and then we gap up today to pull back and not fill the gap by about what, 2 ticks? Yeah, 2 ticks is what we missed the gap by, or almost a full point, 3 ticks, excuse me. So emotional trading, but however, we have broken out of a daily balance to the upside. We've been one time framing up 1, 2, 3 days in a row now, meaning we're taking out previous days' highs. So one time framing up continues. Not very strong action, in my opinion, as we've only been grinding up with low volume and small ranges. However, the market is still moving up, and you kind of have to trade what is in front of you. We filled that gap back from the other day with once we opened with the gap today. So we opened up with the gap only to fill the gap back from February. So let's get into the price action. Let's get into what I traded today. I call it 2 trades, and that was it. That's kind of all you need. I'm trying to be more patient, wait for pullbacks, especially on these grinds up, and then obviously reduce my size in trading, as that has kind of been the issue with these last few days, was size and not being patient, waiting for the trade to come to me. So let's go over what occurred today and break it down. Once we go over this, we'll go over our weekly and our daily time frame, and kind of look at our monthly as well. If you guys do enjoy the content, please leave a like, and if you are new, subscribe if you do not mind. If you do like what you see, so looking at our 30-minute chart, be looking at our 30-minute bar chart here. Going to label them out real quick. That way I can just kind of reference. So each one of these time frames, A through M, we label them just for better organization. And that way, whenever I reference something, we kind of know what bar I am talking about. So I label each one of these A, B, C, D, E, F, F, G, H, I, J. And you'll get to learn your ABCs with me. So if you stick around, you'll learn your ABCs. H, I, J, K, L, and M. Good old Curly, Larry, and Moe. All right, so we end today with a gap, not a very large gap, but a gap and a triple distribution. So what do I mean by triple distribution? So that means we have not only one set of single prints, but two sets of single prints in an area where we traded back and forth through. And I'll just break those down here in a second. So let's go over what happened early on in the morning. We open up an A period with a gap, uh, only to push up, fill the previous gap that we had been looking to fill on the daily for quite some time. So we filled this upside gap, moving these destinations off of our target. And next destination was this 41.1950 area, and there was nothing but a vacuum up into that area. And then above this, I don't really have any more destinations because I have not back adjusted since moving to the new contract. So I'll have to break that down and find some more destinations later. So as far as A period goes, we pushed up, actually pulled back initially, attempted to fill the gap, which was a great risk reward long opportunity against the gap fill. Because had you taken the long there, maybe you use the gap, or not the gap fill, but you take a long before the gap fill or at the gap fill, and then maybe use back into M's range as you're out, as you would have only been risking roughly 5 to 6 points to rotate back up and potentially get a pretty hefty payout. So great opportunity there at A period to take a long against that. After that, didn't really know what the market wanted to do as it was a pretty small range, just chopping back and forth. Then B period opens up. We attempt to have a lowest accepted price. And what is the lowest accepted price? That is just when B period or A period closes. So the first 30-minute bar closes and B, the second 30-minute bar opens and pushes up right away and without any pullback. So we almost did that initially as we did end up pulling back. We still may call it because it only pulled back by a point and then pushed up. So a potential lowest accepted price. I wouldn't lean too much on it because we did pull back and then bounce off of it. But B takes out A's high, establishing a one-time framing up. So on our checklist, buyers now have the gap. They have value that is higher. They have an overnight high, so they took out the overnight high. And now they are one-time framing up by taking out A period's 30-minute high. So we are got a lot in the buyer's favor. Then after B period pushed up, small range, C opens up, takes out B's high, establishing, I believe, our first set of single prints. And we'll mark it as we go. Establishing our first set of single prints. Initially was pretty large, not large, but big enough to lean against. And then D period pulled back and filled it in a little bit. But C took out B's high, which was our initial balance high. So that was another feather in the bull's cap as buyers continue to grind this market up higher. So B takes out A's high, right? Continues or starts one time framing up. We have our initial balance set after B period closed. C period takes out B's high, continues the one time frame up, and then guess what? We take out the initial balance high, continuing the move up. Then we have a set of single prints, so that is also in buyer's favor as that counts as an intraday gap. We have a small set of single prints that begin, and we continue to grind up. D period opens, pulls back into the set of single prints, creates a good long opportunity against the single print fill. Had you gotten below it, you probably would have gotten out of your long position, but good opportunity to buy on the pullback against the single print fill and rotate up because as these single prints, they act as an area during the day that they are created. They are something that you could potentially lean against because shorts covered in that area and are probably wanting to cover if we pull back into that area as they may still be short, or if they shorted up here they would want to cover near that set of single prints, creating a support area. So D period pulls back and we push up, take out C's high, creating another large set of single prints, continue the one time framing up. So no point in time in this market had you bought in B period, had you bought in C period or in D period, told you to get out of a long position. Each time we pulled back, it was a great opportunity to buy. Even though we moved up slowly, it did move up nonetheless. Grinded every short out of their positions as we create another set of single prints here, another area for us to lean against on a pullback. As you can see, D period closed right here, right there. And then E opened slightly below it, pushed down a little bit, couldn't get much of the single prints, and then boom, pushed up, takes out D's high, continues to one time frame up. So now we've created so after creating back-to-back single prints, we create what is a second distribution. So our bottom distribution is A's low to B's high. Our second distribution is E's low to F's high because we pushed up, continued moving up higher in F period, got to that 119.50 area where you could have potentially seen sellers step into the market right around this area. And we kind of did as we rolled over in G period. F attempted to have another set of single prints, but G filled them. And then H stops the one-time framing. So H was a good opportunity to buy against the set of single prints down here. You could have taken off profits on the push up. And then I period ended up being an afternoon pullback low because it was one of the first time frames after F period to take out a previous time frame's low and then rotate up. That's where I got involved. I took a long position in I period against this set of single prints and probably would have gotten out had we gotten into the set of single prints and then waited to see if we pulled back further to fill the set of single prints, and then maybe I would have re-entered in a long position. But initially, against that set of single prints, against ease low, I felt like it was a good risk reward long opportunity. So I entered the market, got in. This thing pushes up, and I exit my trade for a nice win. I could have held because normally, whenever you have a trend day, a strong trend day, and you have an afternoon pullback low right here where you can buy against that set of single prints. So you buy here, right? You have this area here as your support, right? That's your support area. Just highlight that. That's your area of support. You buy against that, and guess what? You rotate up and create a new high on the day. Creates good opportunities. Nothing told you to get out of a long position after I period. After you enter that position in I, J pulls back, can't take out I's low. K pulls back, can't take out J's low, and then we probe up in L period, creating another set of single prints in another distribution later in M period as we have a price probe towards the top. So that is today's price action in a nutshell. I got involved once we popped the top in L period. I got long right here, seeing that we had a nice consolidation, flag pullback, started to consolidate and rotate back up towards the high. Felt like odds were really good to set a new high on the day as there wasn't much resistance above us. Didn't see sellers stepping into the market. And so I entered into a long position right around 23 and exit on the way back up toward 29. Nothing told me to get out of the trade other than wanting to take profits, as it was a good opportunity to take profit because I did not know what Mo wanted to do. And I could have honestly stayed into the position until the close, but did not have the opportunity as I had other obligations to do. So create another small set of single prints here in L period, and we'll mark those. Now these become destinations if we begin to pull back into it, destinations to fill. So if we pull into these areas where the single prints are, you will look to potentially fill them with supply. If there's enough supply, they will fill. If there's enough inventory to rotate lower, they will fill. They become destinations and targets for these algorithms and short-term traders to take out. So we have today's high, a price probe. Today's high, a price probe, three sets of single prints, a triple distribution. So the upper distribution is all of M's range. So from M's high to M's low, where the single prints start, is the upper distribution. And then from F's high, where the single prints fill, to E's low, where the next set of single prints start, is the middle distribution. And then the lower distribution is B's high to A's low. That is the lower distribution. So inventory was absorbed down here on the pullbacks and then got distributed here in this middle area, only for buyers to step in, continue to buy this thing up. Inventory got absorbed here and then got distributed up here. So it was a triple distribution of inventory. That's how you got to look at it. All right, so let's mark these areas and then start looking at our larger time frame. So the high day from yesterday is now an area where our gap will fill. So gap fill right there. Then we have today's low of day. Let's go ahead and bring this back out so I can see. Today's low of day was right there at 88.50. Great risk reward opportunity there. Anybody that bought near that or back above the open, great risk reward trade there. Today's low of day, 331.23. It was also end of quarter. We end up pretty good on the quarter for S&P and the NASDAQ. Russell, not so much. Low of day, gap starts. We'll just mark that on there. Then we have where our single prints will fill, because obviously as you come in from the highs, you want to look to fill these areas. So they'll start and then they'll fill. Start and then fill, start, and then fill. So this is an area where they would fill right here at B's high, which is 4104 even. So single prints fill here, 3123. And then right here at D's low is where single prints will start. Single prints start right there at 4104.50. 4104.50. Also, the high of day pushed right into an area of interest for me, as it is a 41.41 level that I've been keeping an eye on and wanted acceptance above, and I'll show you that on the larger time frame. And that's right where we pushed up to and kind of backed off initially. I'll show you that here in just a second. Single print start here, 31.23. C's high, 3107.50. 0750 is where the single prints will fill here. So single prints fill 323, or not, 331.23. And what is it's a single print is essentially, you see how D period was the only time frame to go through this range of 4110.75 to 4107.50. No other time frame. So E didn't go through this range. C period didn't go through that range. So only one time frame went through that area. That's why it's called a single print. Whereas in the range between D's high and E's low, it would be 1, 2, 3, 4, 5 different time frames traded in that range. So no single print there, as different time frames or different time frames traded through that area. Now this is where the single prints would start. So that's what a single print is. It's essentially a intraday gap, and just like we look for gaps to fill on our daily charts, we look for them to fill in our intraday chart whenever we pull back into it. We have our afternoon pullback low here at I's low. Great risk reward opportunity to buy there whenever we initially pulled back in the day. Now, once again, these become destinations on the downside if we were to pull back into them. So they may not be as strong to lean against. However, it is a good opportunity to potentially take a risk reward long there at 1150 if we pull back to it, and then use 1075 as your stop or your out. Or if you feel more comfortable taking the heat all the way down to the single print fill, which is about 6 points to the downside, you can do that. Potentially see a bounce back up if we were to pull back into that area. So afternoon pullback low right there at 1150. Then we have our next set of single prints up here at 2175. Single prints fill here. Single prints fill. And then we have where our single prints start right here at 2475. Single prints will start. And then we have our price probe right here at 35.50. Price probe. So the most bullish thing you can have as a buyer is to open up above the price probe. You do not want to see us pull back into this price probe or back into this price, as is an area where we spiked through, price did, and then as you can see, M pulled back and N pulled back and couldn't get to it. So open up above it, take out the day's high, continue the one time frame up. And then today's high of day right here at 41.25, which is that 41.41 area of interest for me, where I would like to see acceptance above, because last time we were above it, we did not find much acceptance. And I'll show you guys here in a second on the daily how that looked. And it resulted in us pulling back pretty hefty. So there's our high of day. So if then statements, if we open up above the price probe, you should take out today's high with no problem. You're wanting to look and see if you can find 41 acceptance above that. If you open up above, can't take out today's high, you will roll over and potentially fill this set of single prints down here at 41.2475, and they fill at 41.2175. If you can't find acceptance in this upper distribution and you rotate into the middle distribution, which is F's high to E's low, you will potentially test the bottom of that lower or that middle distribution where the single prints start down here at 41.1075 and they fill at 41.0750. If you can't find acceptance here, you will rotate even lower and potentially find acceptance in our lower distribution of B high where the single prints fill at 41.04 and the day's low where the gap starts at 40.8850. However, with things being the way they are, the market moving up, you should continue to one time frame up. However, keep in mind that the market is long and we have not only one but two gaps to the upside with emotional trading. So if we were to pull back, it wouldn't take much for us to pull back and take all of this back in a quick fashion, as that's what we did here. There's plenty of times where we've moved up in a pretty hefty fashion, but because this has been a light move up, the move downward could be rather quick and much heavier to the downside. I'm not saying that's going to happen, but if it were to, just keep your, be ready and keep your risk to a good extent. Now let's look at our larger time frames, and I'll show you that 41.41 area that is important in my opinion. So here's our 4-month balance high. Now, could you call it a 5-month and use this month's low? You can, but for me, we are in a tight consolidating 4-month balance high. As this area right here back in December's high, we attempted to get above in February, pushed above 41.41 and could not find acceptance above that area. We pushed up to 42.08, but rolled over, came back in, and then attempted to test our 4-month balance low, which at the time was a 3-month, but now is a 4-month balance low. So we're pushing up into that 41.41 area where we will potentially find resistance in this 41.41 area to 42.0850. As we approach the top of our 4-month balance high, 4,200 will be a big area. And then you have our monthly extreme high right here at 43.2750. If buyers want to be serious, you will find acceptance over this area and above our 4-month balance high and rotate up into 43.2750, our extreme monthly balance low. However, if you cannot find acceptance above that 41.41 level, you potentially roll over, take out this month's low, take out our monthly balance low, and then possibly get down to 35.02. However, headlines have not mattered to this market as we just continue to chug along and push up higher. So maybe this year is a little bit different as we end up on the quarter for the first time in quite some time at the start of the year. So that's a good look for the market at the moment. Now let's look at our weekly time frame. Weekly. We are now one time framing up on the weekly, firmly one time framing up on the weekly as we have broken out of this weekly balance. Weekly consolidation right here. Above this concession of lower highs, so we're breaking that trend. Great opportunity for anybody that does take these long positions here. They're probably reaping the benefits pretty well right now. As we broke above this high here at 40.70, you're now roughly 40-50 points in the money. As we broke above this balance high, we are now one time framing up on the weekly. So weekly is one time framing up. Daily continues to one time frame up, and as you can see, we've now pushed up with pretty good extension above this weekly balance high, and then we are pretty much above our daily balance high by a good margin here. And I'll zoom this thing in a little bit so you can see. So filled that gap that we were looking for to fill, right? Filled that gap. We have a couple downside gaps that we look to fill, but we are above our balance high, one time framing up 1, 2, 3 days in a row. Is this momentum buying? Is this market getting a little long? Yes, in my opinion. Now keep in mind, this was an area of consolidation right in here that we are pushing up into. You want to find acceptance in this previous balance area. You want to find acceptance here, as this was a pretty hefty area of resistance as we chopped around in this area before finally moving and making lower lows. Next upside gap that we have to fill is in this area back from this day here of August. And yep, back in August. So we have that gap to fill. As you can see here, we broke that concession of lower highs. For now, we are moving up pretty good. These moving averages are starting to curl up. They are beginning to curl up, so that is a positive sign. If you want to see all these moving averages begin to move up for the buyers, and that could be pretty good. In my honest opinion, I kind of hope we begin to get into a more steady climbing market that will be better for all of us that trade it. More consistent market, I should say. With all that being said, ladies and gentlemen, thanks for stopping by. I know these videos are long, especially the ones on Friday, as there's a lot of information to review. We'll catch you guys in the next one. See ya.